Welcome back to our Domestic Supply Chain Summit here at FreightWaves. I'm Kaylee Nix, and we are super excited to get into this next fireside chat. The last 2 years of the COVID-19 pandemic have seen a ton of influx of capital into freight tech. And today's market, it's a little difficult to figure out where we sit and if freight tech has the power to stick around. So, to do that today, we've got Natan Reddy joining us from Ironspring Ventures. And Natan, thank you so much for being here as part of the Domestic Supply Chain Summit and for adding some light on this topic.
Appreciate it. Thank you, Kaylee, for having me.
So, as we get started, give us a little bit of an overview about Ironspring and where you guys sit with the venture capital space, specifically as it regards to investment in freight tech.
Yeah, no problem. Here at Ironspring Ventures, we're really a sector-focused fund on what we consider to be the digital industrial space. So we look at generally software-centered solutions that are predominantly looking at supply chain logistics, but also construction tech, manufacturing, energy, and more. Obviously, a huge part of that supply chain category is freight tech. And so that's where we've really enjoyed diving in, meeting founders in the space over the last several years and whatnot.
I think from a broad perspective, freight tech and specifically companies who are doing that software as a service type of initiative, who are really looking to come to market with not necessarily a physical product, just an idea and something that downloads off the internet, were really kind of sexy investments for VC funds, especially these last 2 years, because you've got companies that don't have a lot of overhead, don't need a whole lot of marketing, and don't necessarily need a whole lot of help to get started and to have some success. Do you think that that was something that we saw kind of overall throughout the space over the last 2 years?
Yeah, absolutely. I mean, it's funny because I've been actually really tracking this space probably since 2016, 2017. I used to lead supply chain research at CB Insights. I think there was a noticeable difference, in light of the COVID-19 pandemic, where we really saw this real tailwind in the direction of all supply chain tech. It was pretty fascinating to witness from the outside. I think it always was important, but didn't quite get the deserved attention that it really needed. And so while the waters have cooled a little bit over the last, 6 to 9 months or so, I still feel that the broader industry's understanding of why supply chain tech is valuable is still very relevant and still going to propel the space forward.
The pandemic was something that was this anomalous event in our space, right? And I think the duration of the events and the duration of the impacts of the COVID-19 pandemic have really kind of given folks almost this false sense of where we sit in the broader global economy, but also in our domestic US economy. And it's made that realization of coming back down to earth a little painful in some sectors, especially on the VC side. Do you think that that's kind of a general sentiment around VC companies right now? Is that we spent the last 2.5 years acting on these inflated valuations and these valuations that were really dependent on this COVID-19 focused economy, and now that we're coming back into balance of normal, it's totally different.
Yes, it's very true. My friends across the VC ecosystem, we've all generally been experiencing the same deal slowdown. I think alongside that does come some positives around more reasonable valuations, more time to truly understand what you're investing in. But there's no doubt it's impacted all the sectors that we cover as well. What I will say though is that supply chain does tend to have a level of staying power that really doesn't necessarily permeate other categories across consumer or whatnot that may be more superfluous at times. One trend, for instance, that I've been seeing take place recently is around onshoring, for instance, and nearshoring. This has really come to light in regard to how China has behaved on the manufacturing front, which has really driven a lot of folks in the US to want to bring their supply chains back home or to Mexico or to other countries in North America. What again that I think represents around the staying power of supply chain is even though many of the startups that we may have invested in or may have looked at during COVID or this pre kind of tech VC slowdown were working kind of on international supply chains. Now they're focusing on how can a company be as nimble as possible to reshore and nearshore domestically or within North America. So I think that's something that I'm very excited to see and watch, as we move into the next 6 to 9 months.
So, as we start to see these companies kind of turn over and really have to adjust to operating in this less inflated, back to normal environment, do you think that we're going to be seeing a little bit more emphasis put on companies who are taking the opportunity to stay domestic instead of investing in those international relations and international initiatives, maybe looking more at VCs being more likely to fund people who are doing things closer to home because maybe it's a little bit lower risk?
Yes, I think that's a trend that you could see. I do want to put one caveat and nuance in there is that you have a country like Mexico, for instance. We have a portfolio company down there whose trading volume with the US has grown leaps and bounds in light of what's happened in China from a manufacturing perspective. So I think, well, yes, that's true. There may be a focus that's still technically international, but it may be with a country like Mexico, for instance, instead of with China. But to your point more broadly, yes, absolutely. And I think one example of that is thinking about how to reskill labor in the US as well to be more tech efficient, tech enabled. One of our investments called Plus One Robotics is specifically focused on collaborative robotics that help warehouse workers improve their efficiency. This is really delineated from full automation that we often see for certain solutions in supply chain. So I think you'll also see a tendency to go toward how can you help existing workers in the US reskill and bring tech into their jobs to make them as efficient as possible without replacing them. So I think that'll be a trend as well.
That's huge. And I love that that trend is something that's very forefront to people's minds. Coming from a VC firm standpoint and kind of looking at where you guys sit and how you like to invest going forward, you are going to see a bunch of companies on the smaller side, some SaaS companies, maybe some physical product companies who get snapped up by these bigger companies who have that staying power because maybe they're a little bit more established, maybe they have a little bit higher valuation. When you guys, especially for a company like Ironspring, kind of look at how you take your investment strategy now going forward. Does that alter how you guys look at supporting these smaller companies, knowing that they have the potential to be snapped up in the future?
Not necessarily. I think at the end of the day, we're always looking for the folks and the founders that want to have that venture scalable $1 billion plus vision. Things happen along the road, and eventually, founders at times have to take what outcome is best for the company when that invariably happens. But at the outset, we're always going to be on the lookout for folks that have that greater vision. That's something that is really particular to venture. I don't necessarily think all startups are suited for venture. I'm the first one to say that. But for the folks that feel that they are going after those massive plays with very exciting visions that incorporate a myriad of solutions that go way beyond kind of one pain point. That's what we're always going to be on the lookout for, and I don't see that changing.
So let's flip that perspective on the other side from a founder perspective now. If you maybe are coming from this and saying, you know what, ah man, I've got this great entrepreneurial idea, but the way that the market looks right now isn't necessarily conducive to me seeking funding. Do you think that there needs to be this like level of cautious optimism, or for a founder, if they've got the right spirit, if they've got the right idea, can they attract that VC attention no matter what the market looks like?
Yeah, I'd say it's a little bit of a mix of both, and I think the sentiment still applies to folks that are maybe still early stage, but maybe a hair down the road from maybe the folks that you're referencing. Um, I would say for the top founders and the most competitive deals, that likely will still remain that you can probably find some element of appetite for your company. I'd say that's a minority of folks and relatively rare for folks from alternative backgrounds or from backgrounds that may not be as quite involved in the VC scene in an existing sense. Yeah, it's going to be a tough environment, and I think we're the first ones to say that folks should be preparing to extend the runway. Grow at all costs is not the name of the game anymore, and really looking at measured sustainable growth in a way that you can actually hit milestones on plan is really going to be what a lot of investors are looking for going forward. But we hope that eventually folks that ultimately have those great ideas, regardless of their background, can eventually survive long enough to get funding they deserve.
I think that we've seen a really interesting evolution in the way that freight tech and VC-backed freight tech companies have kind of changed within the last year in and of itself. And that kind of snap up of the smaller companies has happened in a lot of cases where you've seen, companies join together. And unfortunately, some companies have now had the side of layoffs, and they're going to continue to see that even if they have a successful freight tech solution. When you're talking about maybe a company who has a decent amount of funding, a decent amount of capital to work with, maybe on their books or in their bank account, do you have any advice on how to survive and maybe extend that runway, even if you've already been funded, but you're not quite fully there yet?
Yeah, that's a really good question. I'm gonna have to think on that one for a bit. I think for us, what we've seen as a pattern is really understanding how to really properly reforecast your budget, to really understand and take a look at what it takes to run your company bare bones and build up from there to understand what's a necessity and what's not a necessity. Again, it's going to be dependent on what the particular company is and what potential opportunities they have down the road, a year and a half, 2 years from now, and that's going to be a change depending on the circumstance. But what we've seen are a lot of folks reforecasting, rebudgeting, really understanding who the crucial players are that can give them that top line revenue in any part of the organization, and really focusing in on there.
So I think when I think about freight tech solutions that have been funded and have been successful over the last 2 years, the first ones that come to mind are digital brokerage. You've seen a ton of digital brokerage solutions come out and do really, really well. You've got a ton of track and trace features coming out, supply chain visibility. That's something that is very, very highly talked about. I think visibility was like our unofficial buzzword of the year in 2021. And between that visibility, between sustainability, a lot of this is been kind of ripe for VC funding and ripe for VC attention. Is there one specific sector that you think is going to have their next day in the sun coming up maybe in 2023? Or do you think that we're still going to see continued emphasis on that visibility, sustainability, and digital brokerage aspect?
I think we're going to continue to see kind of a honing in on those three existing categories. I'd say one area of it, sustainability front, is an interesting word. And it's one that we wrangle with internally as well. I think as a broader sector, need to better understand and define what that really means. One thing that I love to say about Ironspring's portfolio is that every single company in our portfolio does fit within the lens of sustainability, regardless if it's explicit or implicit. And I think that supply chain field as a whole is doing a ton to kind of move forward or attempt to move forward sustainability within the broader economy and in society as a whole. And it's going to be about understanding what metrics we want to be driven by, how to collaborate with each other. I think one area that's always been a bit evasive or a bit elusive for the space are kind of visibility from a collaborative standpoint, and kind of understanding what those shared goals might be in regard to sustainability or in regard to greater transparency within the overall global supply chain will be interesting to see as well. I think in the past we saw a lot of that kind of collaboration focused around traceability through blockchain, which definitely was tied to sustainability as well. That kind of had its challenges. I'm curious to see how that moves going forward.
People are a little protective of their data, especially in the freight tech space, that's for sure.
They absolutely are, and there have been some recent headlines and news about folks collaborating with each other, kind of in the freight visibility space. And I'm very curious to see how that ultimately shapes up. I think it is very protective, and not everybody necessarily has the same incentives. So again, it goes down to what are really our kind of collective goals as a society in a way, and who's the arbiter of that. It's tough. It's not easy.
Not an easy question at all. Natan, last question for you here. This is, of course, the Domestic Supply Chain Summit. So I want to bring it back talking about goings on here in the US and honestly, the broader North American economy as a whole. I consider that mainly domestic. When we look at kind of this shift away that could potentially be happening from this real, truly globalization, global economy, as countries become more protective of their data, of their borders, of their own internal doings, and they have to grapple with things like geopolitical conflict, and you have to talk about now sustainability challenges from country to country to country. Do you think that we're going to be seeing more of a focus on fixing our problems here at home first and then looking at kind of fixing those globalization problems, like a putting the chicken before the egg now actually happening?
Yeah, that's a tough question. I think in some elements and in some aspects, I think this is definitely in regard to kind of what we spoke to around reskilling and reshoring labor in the US. I think that's going to have a very strong domestic focus within the US specifically. I do think, again, that caveat being that you're going to see some international players rise and fall. Again, China's role with the US may change a bit over time than it has been over the last 2 years. You may see other players like Mexico or other countries in Latin America rise in importance. And so, from that regard, in that perspective, there still may be an equal push and pull between that international and domestic. But I do think for existing labor here, you're going to see that really kind of pointed attempt to figure out how to best reskill and reshore labor in a tech-enabled way here. And that'll be a really strong focus here over the next 5-10 years for sure.
It's going to be interesting to watch. Natan, thank you so much for joining us for this Domestic Supply Chain Summit. If people want to learn a little bit more about you guys at Ironspring, where can they go to do that?
They can visit our website at www.ironspring.com or check us out on Twitter or LinkedIn. We're happy to reach out to you from there.
All right, easy enough. Thank you so much. And thank you guys for staying tuned for our Domestic Supply Chain Summit here on FreightWaves. Of course, if you miss any of our sessions today, you can find them on demand on tv.freightwaves.com. Stay tuned, and we will be right back.